Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Monday, the 10th day of November, 2014, and this is the daily report for gold and silver. And what a way to start the week. We are down dramatically across the board in the precious metals markets. We have gold in terms of percentage drawdowns leading the pack, so to speak, with silver off about 1.5%, gold almost 2.5%, trading off about $28 on the day, $11.50 and change. As you can see, the low $11.46.90. We're just off of the lows. The high $11.73.90. Wow, that is something of a high. Of course, we did put out a special trade alert this morning. We got short this market. We got short roughly at $11.67 or $17 from here, and we did that just a few hours ago. We'll talk about that trade, our strategy, our stop, why we put our stop where we did, and what we are looking for in terms of our exit strategy, all on today's daily report. First, let's take a look at silver. Now, in silver, this is a weekly. Let's quickly convert this into a daily, but we are down substantially. You can see that. This is that rise back last week. Of course, we've got an incomplete dark cloud cover, currently trading at 15.57, off about 25 cents on the day. The low 15.51, the high 15.87. More on silver in a little bit. So traders, we're looking at a 720-minute chart. Let me go ahead and blow this up. And this is actually the chart that I was looking at as I issued our sell recommendation. I did that roughly an hour and a half before the opening in COMEX, so all of our mainland subscribers could make sure and take advantage of this trade. But in essence, what we saw was as the market opened up overseas, and that's this first half hour of this first half day, of trading right in here, we saw some weakness. And the key is that when I saw a follow-through weakness, this is roughly 70 here, I started to see the market really, let's try to line that up as best we can. I really saw the market starting to break down at around 1170, and I felt that there wasn't any kind of follow-through whatsoever to this dynamic rise that we saw on Friday. I actually think that that rise was in essence uncalled for and was a technical play at best, because when we look closely at the jobs report that came out, I don't think it was as bad as many people state. Actually, I think the jobs report came out pretty good, but it did come in under expectation, and therefore the market attempted to catch up with the anticipated results of the report, so to speak. Now, in terms of stops, I placed a stop at 1183, and let me explain why. 1178.52. That is our 38% retracement, and it is a simple retracement from really the beginning of the drop at approximately 1255 all the way to the bottom here, which is roughly 1131. That's our new low, and that's the low we want to see if it's going to break. My sense was we entered at 67. If the market at any point, and see this is a red candle, but if the market at any point was to turn around and to begin to trade higher, if it broke above this particular area right in here, these tops, my sense was that it would probably head higher. So by placing our stop at 1183, which is roughly what, $4 or $5 above this particular top, and the reason I placed it a couple of dollars above that top, I was originally going to say just place it just above 78, but I have had subscribers telling me that that is a little bit too nebulous. And the reason that I typically do that is I don't want to announce the stops publicly. But in as much as I have had some commentary come back to me in terms of emails for subscribers, I put an exact number in. We'll see how that works out. But for right now, we have a stop at 1183. We are short at 1167. Market is bouncing back a little bit off the lows, currently trading at 1153 on the day. So traders, I've talked about our upside risk, what I'm willing to take on the trade. And as we've talked about, that is 1183 or just above this 1178 point. You can see that the market has substantially broken below that point. Now, where are our exit strategies in terms of profitability? Well, let's see how the market reacts right at these bottoms at around 1140 to 1145. If in fact we get a continuation of this market selling off, we've got really, in terms of historical data, we've got these recent small bodied candles here. We've gotten our extreme low at 31. And my sense is that there is a distinct possibility that we will see this market not only track to this 1145 area, but if it cannot find support in this particular price point, it's got to really make a play for the 1131. Now, depending on if and when it goes to this area, how it reacts, I think we can be looking at gold at the low 1100 range, 1110, 1120, in that area. To really look at where we think this market could go, we can't use these types of fib retracements because we're going to new lows, 4-year lows. And so when we do that, we really have to pull out some hardcore time cycles that really account for when the market was at this point at a former point in history. And traders, as I said, to do that, we really want to look at some more historical data. This, of course, is a weekly chart. It's got a number of different fib levels. Really what I've done here, and my longtime subscribers have seen this chart on countless occasions, but really what we're doing here is we're pulling different fibs, all going to the record top, all with different starting points, as you can see here, here, and here. That gives us inside, middle, and outside. Of course, we look for harmonics. We talked about that. We have a 61% retracement at 1059. And then we also have a 50%, and I think that this is a strategically important one, at around 1102. So, should the market continue under pressure, and that's a big should, we can't take this kind of stuff for granted, but should we see this continuation occurring, our next real solid level of support really doesn't come in on a technical basis till around 1102 or 1100 per ounce. So our strategy right now is just as I've laid it out. We want to see how it reacts. If it continues to move lower at 45, if it breaks through there, if it breaks through 31, our real target has got to be 1102 on this particular trade. Now, when you consider the fact that we originally got short at 1208, and then we rode this market down solidly, but on that Friday just recent, we saw the market clip up $38, took a lot of our profits out. Now, we still got out with a $36 profit, but we gave back about 30 of those dollars, of course, as that market came up. I am pleased to announce that we got out at 71. We got back short at 67.50, call it 67. The difference between that meaning $4. So if we have a continuation of this market selling off, we didn't give up anything, but we did put a protective stop in, which locked in some profits and allowed us to place this trade here, which I don't want to jinx myself, of course, but currently looks to be a pretty good trade. So traders, what about silver? Well, I've turned our conventional one-day into a two-day chart. Don't really want to look at a weekly, but I do want to look at this two-day chart. This was a pretty critical level right here, just above 16. And the reason that it was such a critical level, you have this one top here. You can see this true action of it being supportive in here. Does dip below here. So you see it a little bit supportive here. If the market cannot hold that particular area, I think it's going to head to about $15. Absolute low right now has got to be based upon this top here. If the market continues under pressure in gold, if we see gold break and go towards 1100, we're probably going to see silver break 15, maybe even go to $14 on a worst case scenario as this market deteriorates. We'll have to watch, we'll have to see. This has been Gary Wagner wishing you as always good trading. We're certainly getting that towards the end of this year. Talk to you tomorrow for another daily update and review. One small note, I will be leaving for Jakarta. We will have a full show tomorrow. Full show show on Wednesday. Thursday, we will not have the video portion. I will do the letter and the commentary. In between, as I'm traveling, I will arrive and be able to get out a commentary, but probably not a video report. We will have video reports throughout the following week, although they might not come every day. More importantly, they might come at a different time, depending on how I adjust to the time zone. However, please note, I will be monitoring, as I always do, 24/7 with a little bit of sleep in between. So let's see what we can generate over this next week. Bye-bye.